Japan and the US have had a strong alliance since the end of World War II, when the atomic bombs destroyed Hiroshima and Nagasaki. Over the next few decades, Japan became one of the biggest foreign holders of US Treasury securities, second only to China. However, recent data shows that Japan's holdings of US Treasuries have shrunk significantly, with more than a 21% drop since 2020. At the same time, China, which was the second largest holder, has cut its US Treasury assets by 44% since 2013. In the last 3 months, Japan has sold $61 billion worth of US Treasuries, while China has cut its holdings by $51.3 billion. These numbers show that both countries are selling off more and more US debt. Such big changes have big effects on the US economy and the international financial order. Less foreign investment in US debt makes people wonder about the direction of US economic policy. There could be changes in interest rates, and the dollar will still be the world's main reserve currency. All of this is happening against the background of Donald Trump's recent re-election. His foreign and economic policies have historically been unpredictable and focused on putting America first. These changes in the behavior of two major U.S. creditors could put pressure on their relationships with Washington, which could change the way the global economy works. In this video, we'll break down these important events by looking at their historical background, economic effects, and the strategic environment that could guide us in the future. Japan-China interactions and the broader international marketplace. To begin, let's consider the US-Japan relationship. Over time, for more than 2 centuries, Japan adhered to a stringent isolationist policy known as Sakoku, under which foreign entry was heavily restricted and Japanese citizens were forbidden from leaving the country. This policy aimed to preserve Japan's social order, limit foreign influence, and maintain political stability under the Tokugawa shogunate. The turning point came in 1853 when Commodore Matthew C. Perry of the U.S. Navy sailed into Edo Bay, now Tokyo Bay, with a fleet of black ships, steam-powered vessels whose technology and weaponry starkly contrasted with Japan's. Perry's mission, driven by American interests in expanding Pacific trade routes and seeking coaling stations for whaling ships, exerted immense pressure on Japan to abandon its isolation. The resulting Treaty of Kanagawa in 1854 effectively ended Sakoku. This agreement not only let U.S. ships into 2 Japanese ports, Shimoda and Hakodate, but it also set a precedent for more unfair demands from the West and the negotiation of more unjust treaties. These treaties, which gave foreigners more land rights and put low fixed tariffs on Japanese goods, caused unrest within Japan and were embarrassing to some Japanese leaders at the time. However, these forced openings eventually led to Japan's modernization as it looked to Western countries, including the US, as examples of how to improve its politics, economy, and technology. The fall of the Tokugawa shogunate in 1868 and the subsequent restoration of the Meiji marked the start of a new era of rapid modernization and westernization. MS Aries was sent by the Japanese government to learn from Europe and the US about how to adopt Western-style business, education, military, and political institutions. American educational models, legal codes, and industrial techniques had a big impact on the Ma government's plan for a modern state. Over time, Japan built railways, modernized its army and navy with help from the West, and adopted constitutional government. By the late 19th and early 20th centuries, relations between the US and Japan were mostly friendly. Japan respected the land that the United States had taken over in Hawaii and the Philippines. United States recognized Japan's strategic interests in Korea, but both countries also wanted to become emperors. They worked together during World War I, when Japan joined the Allies against Germany by taking German lands in the Pacific and providing naval support. This set the stage for Japan's rise as a regional power and for more complex diplomatic and economic interactions with the U.S. As the 20th century went on, Japan's imperial expansion into Korea, Manchuria, and later into China and Southeast Asia clashed with U.S. trade and security interests. In response to Japan's aggression, the U.S. imposed escalating economic sanctions that cut off essential supplies like oil and steel. These sanctions threatened Japan's resource-based empire, pushing Tokyo to take a risky gamble. The surprise attack on Pearl Harbor on December 7, 1941. This attack led the U.S. to declare war and fully support the Allies in World War II, which had been going on for years. As a result of the atomic bombings of Hiroshima and Nagasaki, Japan gave up on September 2, 1945. General Douglas MacArthur, who was in charge of the Allied powers, led the surrender. Japan was occupied after the war, from 1945 to 1952. The American-led administration made a lot of changes. In 1947, a new constitution limited the emperor's power to that of a symbolic leader. Article 9 of the Constitution protected basic human rights and made war illegal. Land reforms redistributed property, making wealthy landlords less powerful. Powerful Zatu industrial conglomerates were broken up to encourage competition, and new labor rights gave workers more power. Reforms to education brought in American-style schools and pushed for democratic values. It was during these big changes that Japan became democratic, stable political institutions were built, and the country's economic future was planned. Miracle partnership after the war and economic growth. While the 1951 Treaty of San Francisco officially ended the Allied occupation and gave Japan its independence, the U.S. remained deeply involved in the country's security. That same year, the U.S.-Japan Treaty of Mutual Cooperation and Security was signed, which allowed U.S. forces to stay in Japan to protect the country while shifting the cost of large-scale defense spending to its ally. During the 1950s and 1960s, Japan was able to put money into rebuilding its industries and infrastructure. Its economy was also based on exports. Japan's economy grew at a rate that had never been seen before thanks to advanced manufacturing techniques, strict quality control measures, and a highly educated workforce. The U.S. was an important export market. Japan's economy has grown into one of the world's leading industrial powerhouses thanks to the market. Together, U.S. security guarantees and Japan's strong economy made the U.S.-Japan partnership stronger, becoming a key part of peace and prosperity after the war. Time of the Cold War and strategic cooperation. When the Cold War started, the U.S. as America moved closer to the Soviet Union and China. The Japan alliance became a key part of its Asian strategy. Japan played a bigger role. In addition to its economic importance, it gave American forces logistical support bases and a reliable partner in stopping the spread of communism. Japan helped U.S. operations in Korea from 1950 to 1953 by sending goods and providing services that helped the Allies win the war. During the Vietnam War in the 1960s and 1970s, Japan also helped its own economy grow. Japan's strategic location and role as a stable supplier of goods and services also strengthened the U.S. presence in the region. There were some problems, like trade imbalances and the size of the U.S. military presence, but the alliance as a whole stayed strong. America's promise to protect Japan's security let Tokyo focus on the country's economic growth. At the same time, Japan's quick modernization and willingness to accept American cultural and commercial influence strengthened the U.S.'s overall strategy in the Pacific. Let's stop for a moment. If you like the video so far, could you do us a small favor? Clicking the like button helps us reach more people, and leaving comments with your thoughts or feedback has an even bigger effect. Thanks for watching. Let's look back at what happened in the 21st century. As the world changed after the Cold War, the US-Japan alliance changed to meet new challenges. With the Soviet Union no longer a threat, the alliance turned its attention to other issues. North Korea's plans to make nuclear weapons and missiles, that China is becoming a bigger world power, and that there are new security threats like terrorism and cyberattacks. Japan slowly became more responsible for its own safety. In 2015, Tokyo changed its pacifist constitution to allow collective self-defense. This made it possible for Japan's self-defense forces to work together more closely with U.S. forces and other regional partners to keep the peace. Today, the alliance is more than just security. It includes working together on technology in areas like cybersecurity and space exploration, as well as doing research and development together and working together to fight climate change and pandemics. The US and Japan have also worked with other countries, like Australia and India, to strengthen rules-based order in the Indo-Pacific. This stronger partnership isn't just about protecting their own interests. It's also about promoting shared values like democracy, the rule of law, and free trade, which will lead to a safer and more prosperous future in the area. After this, we'll look at China's holdings in US Treasury bonds over the years. China's holdings in the US Treasury from 2000 to 2024. In the early 2000s, China's holdings of US Treasury securities changed a lot because of changes in the economy and politics. As China's trade surplus with the US grew, it built up huge foreign exchange reserves. US Treasuries offered safety and liquidity, and by November 2000, China had about $58.9 billion in these securities. They kept their value low by buying US dollars, which increased their reserves and poured money into US bonds, even though US Treasuries were still the mainstay. China also began to deal with US government agencies, corporations, securities, and stocks. Rates by 2013. Over the next 10 years, China became the biggest foreign holder of US debt when its position reached a high point of $1,167 trillion in November 2013. Trade surpluses brought in huge amounts of dollars, which were used to support currency policies and keep inflation in check. By the end of the year, China's foreign reserves had grown to over $3.82 trillion, with a large portion of that amount held in US Treasuries. China's economy making sure there is money and steady growth. A steady drop 2014 to 2024, after reaching its highest point in 2013. China's holdings in US Treasury bonds slowly shrank until September 2024, when they were worth only $731 billion. Diversification was important. China started using other currencies and assets to lower the risks of relying too much on US debt. Trade and tech disputes between China and the US have also affected relations between the two countries. Beijing's efforts to boost domestic consumption and keep the economy from becoming too vulnerable also contributed to the drop. Even though there have been cuts, China is still the second largest foreign holder of US Treasuries, after Japan, which had about $1.15 trillion in April 2024. China's cutbacks show that they are diversifying their strategies and adapting to new situations that affect US debt. Financing and the bigger economic relationship between the two countries. As bond markets rose ahead of the presidential election, Japan and China sold US Treasuries in the third quarter. According to the Treasury Department, Japan and China, two of the biggest foreign holders, cut their US Treasury positions by a large amount. Japan sold a record $61.9 billion worth of bonds in the 3 months ending September 30. China sold $51.3 billion worth of bonds in the same time period, making it China's second largest ever sell-off. Yields hit a 2.5-year high in mid-September, before Republicans took control of both Congress and the White House. After that, bond prices fell nearly 4% on fears that Trump's low tax plans would hurt the economy. Policies with high tariffs could inflation at stoke. Japan may have cut back because it changed the value of its currency in July by selling dollars worth 5.53 trillion yen, or $35.9 billion. If Japan and China slow down, it could have big effects on the US economy. A large sale of treasuries could flood the market, with prices going down and yields going up because of supply. Higher yields make it more expensive for the government, businesses, and people to borrow money, possibly slowing down economic growth. When foreigners don't want to buy as many treasuries, the dollar can fall. A weaker dollar makes US exports more competitive, but it also makes port prices higher, which could lead to inflation in the US and market volatility in general. Market instability and questions about the long-term viability of US debt are two trends that could make it hard for the Trump administration to make decisions about fiscal policy and foreign relations. Having less foreign investment may cause interest rates to rise, which makes it more expensive to borrow money and slows growth. This can lead the Federal Reserve to tighten monetary policy, which slows growth even more. While a weaker dollar could help exports, it also comes with the risk of inflation. Plans for Tokyo and Beijing could depend on how the U.S. handles trade. Protectionist actions could lead to retaliation, which would change the flow of trade around the world and make U.S. foreign policy goals harder to reach. In the end, how the U.S. handles these new uncertainties will depend on how fiscal, economic, and geopolitical factors interact. That's it for this video. Thank you so much for watching. If our content spoke to you or inspired you, please show your support by liking it and subscribing to stay in touch with our community.